Cathie Wood, a longtime supporter of Elon Musk's Tesla Incorporated, congratulated him on his acquisition of Twitter Incorporated, which he said will unleash the site's tremendous potential. On the other hand, the takeover has been less supportive of Wood's tech bets. Wood also missed out on some of the Twitter gains after reducing ARKW's holding in the social media platform from 5.3% of the fund at the end of the last year to 1.7% by April 1st, the previous business day before Musk revealed he'd become Twitter's largest shareholder. By mid-February, ARK had sold all of its Twitter assets. When asked if ARK would acquire Twitter now, a representative stated that the business doesn't comment on daily transactions. Why does Wood believe Elon's acquisition of Twitter will reflect positively on Tesla's stock? Keep watching to find out. Elon Musk, the CEO and techno-king of Tesla, bought a 9.2% interest in Twitter earlier this month, making him the company's single largest stakeholder. Twitter's stock dropped 4.83% to $47.01 on Wall Street as a result. Tesla's stock has plunged 10% in the last 2 days, as Musk prepares to use the electric car maker's equity as collateral for a loan to fund the buyout. According to Musk, free speech is the backbone of a healthy democracy, and Twitter is the digital town square where things crucial to the future of humanity are debated. So he's taken up the mantle to set things straight. Cathie Wood, the well-known stock investor and CEO of ARK Investment, has raised similar reservations about Twitter earlier this year, stating that the employer's confidence in the company was plucked a bit when we witnessed some of the censorship issues and debates. She also suggested that the platform's advertising approach might not be the best. Wood's ARK Innovation and ARK Next Generation Internet ETFs have Tesla as their largest asset, and rising interest rates, which have weighed heavily on the valuations of growth stocks, have already put pressure on the firm's innovation-themed funds. We find it interesting that Wood recently sold a large amount of Twitter stock. This year, Cathie Wood's ARK sold shares of Twitter's ARK Next Generation Internet ETF, ARK Innovation ETF, and ARK FinTech Innovation ETF. Twitter is now held by the ARK Next Generation Internet ETF with just over 1 million shares, and the FinTech Innovation ETFs with a little over 300,000 shares. This comes after Cathie Wood sold over 90% of her equity holdings in the stock over the last few months. ARK ETFs continued to sell Twitter shares as Elon Musk declined to join the microblogging website's board of directors. So far, Cathie Wood's ARK has sold shares worth more than $8.7 million. Wood's ETFs missed out on the rapid gain fueled by Elon Musk's admission into the company due to a steep decline in ARK's Twitter holdings. When Elon Musk announced that he had purchased a share in the company earlier this month, the stock had climbed 27% due to the news, hitting 3-month highs near $55. Since then, the stock has slid back to roughly $47. Cathie Wood's Twitter stock selling frenzy continues, despite Elon Musk's refusal to join Twitter's board of directors, despite being the company's single largest shareholder. Parag Agrawal, the social media platform's executive, announced the news to the Globe yesterday. According to Agrawal, Elon Musk's appointment was discussed by the board last week, and he was scheduled to begin his duties as a board member on Saturday. On the other hand, Musk announced his choice not to join the board on the same day. This comes barely a week after Musk took the role and promised to enhance Twitter significantly in the next months. Musk bought a 9.2% stake in Twitter for about $3 billion, according to a filing with the Securities and Exchange Commission on April 4th, making him the company's largest stakeholder. After that, he became a member of the board of directors. However, Elon Musk has removed himself from the Twitter board of directors. Despite his discussion not to join Twitter's board of directors, Elon Musk will remain the company's largest single shareholder. Wood had already made a significant investment in Twitter. After then, CEO Jack Dorsey left at the end of November. ARK purchased more than 1 million shares, worth about $49 million. Even though she has reduced ARK's Twitter holdings, Wood believes that Musk, the ultimate disruptor, has the ability to shake up Twitter's board of directors. Last week, she told Bloomberg Radio that this could be gearing up for another leadership shift. So what does this have to do with Tesla stock? Musk has appeared to demand a lot of say over the company's operations, which might put him under time pressure. Cathie Wood seems to believe that achieving a balance isn't something he can't handle. She instead infers that Elon's acquisition will reflect positively on Tesla. Musk's dedicated fan following has caused stock prices to rise in response to his tweets on multiple occasions. According to many analysts, Tesla's stock is intimately linked to Elon Musk in a manner that other CEOs and companies are not. Elon Musk's faith was enough to keep Tesla's stock afloat, even while the firm was plagued by manufacturing issues that would have depressed the stock price of any other company. The stock has increased in response to Musk's mere hint of a novel concept. Even though there are a few concrete plans for monetizing in the long run, Musk's charisma and ideas appear to be enough to keep Tesla's stock price rising. This is unsurprising, especially in the technical field, where companies and their CEOs such as Steve Jobs and Apple seem to go hand in hand. Musk is also a very successful businessman. He was the CEO of PayPal before joining Tesla, and now he's the CEO and chairman of Tesla. Wood suggests that he might leverage acquiring the platform. Not everyone thinks so, though. People seem torn. On one hand, people are worried that this move will impact Tesla negatively. On the other hand, investors seem optimistic. According to Endpoint Technologies Associates analyst Roger Kay, Tesla's stock price is unlikely to be damaged in the long run and could return to its previous level soon. The financial expert explained that Twitter is a fascinating problem because it's also a well-established company. According to Kay, it's not much about turning into a successful platform as it has already proven successful. He's simply using Twitter as a megaphone. The concept of Musk using Twitter as a megaphone aligns with our earlier mentions of the influence of Elon's tweets on Tesla stock. Musk says he advocates free speech, but a more cynical angle would be that he doesn't want restrictions on the information he can disseminate. The massive dip in Tesla stock may reflect some political displeasure of Musk's latest entry into the social media world. However, we believe Tesla is in a very excellent long-term position. Over the last 5 years, Tesla Incorporated has been a monster in the stock market, with cumulative gains of 1,600%, nearly 20 times that of the S&P 500. According to a bullish Wall Street analyst, shares of the electric vehicle manufacturer might reach $1,580. No one, however, appears to be as bullish on Tesla as Cathie Wood of ARK Innovation. By 2026, the portfolio manager expects the stock price to reach $4,600. Over the next 5 years, this would imply a cumulative return of 350% and yearly gains of approximately 40%. Wood has consistently predicted that Tesla will outperform the market, and the electric vehicle brand has yet to disappoint her. According to some, Cathie Wood is well known for being an overly optimistic growth investor. ARK Innovation, she predicted in a recent CNBC interview, will provide annual gains of 50% shortly, despite inflation and interest rate headwinds. However, ARK has had a difficult start to the year, with a YTD loss of 38%. Even Tesla stock, which has outperformed other growth stocks, has dipped 14% in 2022. So far this year, ARK ETFs have lost between 8% and 25% of their value. On the other hand, Elon Musk and his crew have a history of impressing analysts and investors. If this happens soon, regardless of the challenging macroeconomic situation, ARK may be able to finally break the stalemate, re-establish momentum, and make progress toward Cathie Wood's lofty long-term goals. Cathie Wood believes that ARK Innovation will grow at 50% per year through 2026, while Tesla stock would grow at a rate of roughly 40% per year. And she believes Musk buying Twitter can only give Tesla stock the potential for even greater achievements. Do you agree with Cathie Wood? Comment down below.